What if we told you that a US Bitcoin ETF could be a game changer for the crypto industry? Would you believe it? This isn't just speculation. A US Bitcoin ETF could significantly increase accessibility for investors, providing a safer, more regulated way to get exposure to Bitcoin without the need to navigate the complexities of crypto exchanges. It's been a long road, filled with anticipation and excitement, as the industry has awaited this momentous approval. So the question remains, how did we get to the point of approving a US Bitcoin ETF? The journey towards the approval of a US Bitcoin ETF was not an easy one and took almost a decade. It all began in 2013 when the first applications for a Bitcoin ETF started to pour in. Asset managers from all walks of life saw the potential and wanted a piece of the action. However, the US Securities and Exchange Commission, or SEC, had its reservations. Rejections followed as the SEC voiced concerns about the vulnerability of these funds to market manipulation. The dream of a US Bitcoin ETF seemed to be slipping away. But as with all great stories, there was a twist in the tale. In August, a court found the SEC had been wrong to reject an application from Grayscale Investments. This court decision was a turning point, forcing the SEC to rethink its stance on Bitcoin ETFs. The wheels of change had started to turn. Fast forward to a landmark Wednesday when the SEC approved applications from RK Investments, BlackRock, and Fidelity, among others. These approvals marked a significant milestone in the journey towards a US Bitcoin ETF. These ETFs will be listed on major exchanges such as NASDAQ, NYSE, and the CBOE. To address the SEC's concerns about manipulation, a market surveillance mechanism was created in collaboration with Coinbase, the largest US cryptocurrency exchange. And so, after a long and winding journey filled with roadblocks and detours, the US Bitcoin ETF finally reached its destination. After a long wait and various hurdles, the US Bitcoin ETF is finally here. But what does this mean for the industry and investors? Approving a US Bitcoin ETF is indeed a big deal, and here's why. This monumental decision eradicates the complexities and risks associated with owning Bitcoin directly. It spares investors from setting up crypto wallets and dealing with crypto exchanges, some of which have been marred by cybersecurity issues and legal infractions. Moreover, a Bitcoin ETF boosts the accessibility of this digital asset. It's listed on tightly regulated stock exchanges, making it readily available through retail investors' existing brokerage accounts. This is particularly beneficial for institutional investors, who may face restrictions on investing directly in alternative assets like Bitcoin. Furthermore, a Bitcoin ETF differs significantly from Bitcoin futures ETFs. While the latter track agreements to buy or sell Bitcoin at a predetermined price, they do not precisely mirror price movements. The cost of rolling over futures contracts can also diminish returns, making them less appealing for many investors. This approval marks a significant shift in the cryptocurrency landscape. It not only legitimizes Bitcoin as an investable asset, but also opens the door for greater market participation and potential growth. The approval of a US Bitcoin ETF is a significant milestone in the crypto industry, opening new opportunities for investors and potentially changing the game entirely.